Good morning, listeners, and welcome to the Trade Talk podcast. This is Shrikant Chouhan from Kotak Securities, PCG Research. US stock index futures are trading lower as investors turn cautious after Federal Reserve officials beat the drum of hiking interest rates. The dollar index jumped back to the levels of 108.5, Brent is at 96, and the 10-year bond yield is trading at 2.98%. Asian markets opened lower, but due to a specific news flow on the rate cut from China has helped them to recover from early losses. Singapore Nifty is trading 70 points lower, and for the day the flows are completely mixed. But broadly we are of the view that the markets are currently trading with a negative bias. The positive part is that a put call ratio for Indian markets for the Nifty is now at 0.69 from the levels of 1.20, 1.29 for the current series, and India VIX is again bounced back to the levels of 18.29 from the levels of 17.5. So it will keep the market volatile and it will attract some buying if there is any specific weakness during the day or during the week. On the daily chart, the index has formed long bearish candlestick formation and it has broken important support of 17,850 on Friday, which is negative. Below that, the market may fall to the next levels of 17,675 or 17,600, where the market is having ultimate support zone. If we see the market is closing below the levels of 17,600, then the chances of hitting 17,450 or 350 would turn bright. Broadly, we are of the view that the market should find some support around 17,600 or 675 levels, and from there if there is any reversal formation, then certainly we should look for adding some long positions. So we are of the view that buying is advisable if there is any bullish reversal formation between 17,675 or 600 levels. Otherwise, just stay away. Keep the stop loss at 17,600 for holding any long positions, and for the time being avoid taking any buy on dip strategy till the market is not forming any reversal formation or it is not falling to the levels of 17,400 or 350. Be stock specific for the day. On the high side, 17,850, 17,950 would act as major resistance, and above 18,000 only we can expect furthermore rally in the market. For the bank Nifty, there also 38,200 going to 38,800 is going to act as major support. Below that, the chances of hitting 38,500 would turn bright. IT stocks will remain under pressure as again there is a fear of increasing rates from US officials, so that will keep the IT stocks little bit under pressure. But broadly, as the dollar index moved to the levels of 108, we are of the view that mid cap IT companies should do well. For the day, again we are going to focus on a few metal companies as there is specific rate cut from China, so metal companies should do well. That's the view based on the news flow. Friends, that's all from my side for the day. With this, I'm ending today's morning podcast. Thank you very much for listening me and have a great day to all of you.